That's so interesting, right? You just heard Natalie talking about Uber. Bringing in new products, that hurts profitability. Your strategy seems to me to be like more affordable products for a wider audience base, customer base, but you're doing it in a way that is accretive to your bottom line. How have you done that?
That's right, Dad. Yeah, we've been on point in terms of strategy, making our product more affordable. And we really widened the top of the funnel for us. If you look at the third quarter, we have now 48 monthly transacting users on our platform, which is another record for us. And we're also seeing more users spending on the platform at the same time, so that affordability also is pushing the average spend also on our platform because they're transacting more on the platform. If you look at the number of transactions on our platform, we grew at 27%, so it was actually growing faster than our GMV also at the same time. So what we're seeing is a number of things. One is people are engaging more on the platform. We're also cross-selling more also. As they're coming into certain funnels that we have on the affordable side, they're also trying other products that we have, whether it's the group order that you just mentioned, whether it's the dine out features that we have also for them to be able to go to restaurants. Right. So there's a lot more products that we've actually been monetizing, and that's producing some of the results that you're seeing.
If you have a strategy where group food orders and shared rides are a driver of demand, do you need big volume in order to make this a profitable exercise for Grab?
Obviously, scale is important. The more scale that we have, the more users using the platform, the more we can actually leverage the cost structure of our business and also scale the big driver base that we have also at the same time. So it does play a role. And hence what you've been seeing is that now over a third of our user base, especially in deliveries now, are coming into what we call more the affordable product stack. And it's a great entry point for them to use. You're looking at over 25 million monthly transacting users just interacting in those affordable products, just on the food delivery side of the business. And that's a great way for us because it enables us to, for those users who are a little bit more price sensitive, to try the product first, get a taste of it also. They're a little bit more price sensitive on the delivery fee, and we've managed to be able to lower the delivery fee for them. But they also get to experience the platform. And once they've experienced the platform, they get to also experience other products like grocery delivery, which is still a very nascent business for us. It's about 10% of our deliveries GMV. And at the same time, also, we're cross-selling them to other products like Dine Out, for an example, for them to be able to go to restaurants at the same time.
It's interesting that you also offer fintech as well and loans, but I just got to target the elephant in the room is that we hear all these growth stories. We see analysts raising their price target on you, but the shares are down on the day, Peter. And from the conversations you had with investors and analysts, what was it that perhaps there was a little bit of concern about?
I wouldn't say it's any concern. A lot of the investors are really focused on how we are going to finish the quarter, and I've reiterated them that we're on track to finish a very strong quarter. If anything, that reflects on the guidance that we've given out also. We've increased the EBITDA guidance now to $490 million to $500, and that also shows our confidence in terms of how we're exiting the quarter. I've also told them that in terms of our GMV growth, we're continuing to sustain this growth acceleration in our business today. So we are looking to finish strong in the quarter. One of the areas that we're focusing also is the fintech business. We've given out a $1 billion loan outstanding by the end of the year, and we're on target to hit that also. So all the different parts of the business are on track for us to have a very strong finish of the year.
What's also on track is early 2026. Robotaxi, Chinese robotaxi company WeRide, you've been partnering there. How are you seeing AV as the key area of focus, just briefly?
Yeah, we're leaning into AV. It was the biggest platform in Southeast Asia. We're leaning into the various parts of investments that we're making. One is across learning the tech, and whether it's the WeRide partnership that we have in Singapore, we're hoping to have these cars deployed on the streets in the first quarter to be able to take on public passengers with the safety driver. And also we're looking at US technologies such as May Mobility. We made an announcement with partnering with May Mobility also. So we're looking at all the different tech and taking the best of it and really bringing it to Southeast Asia.
Peter, quickly, across the jurisdictions you operate in, do you recognize one that is a better regulatory environment to deploy robotaxi in?
In all the countries, especially when we're starting in Singapore, because really Singapore when it comes to the government regulations, the standards are very high here. And a lot of the other Southeast Asian countries tend to look to Singapore as a proxy. So we've been working very closely with them, and that's around safety, which is really important, and also the customer adoption of an autonomous vehicle itself. But at the same time also, we're leading it in terms of how we can reskill the existing driver base that we have here also. So we're identifying new opportunities for driver base where they become safety drivers, they become remote drivers, fleet operators, etc., which is really important. So the way we're approaching AV is working with the government, but also working with the driver community and also the end user also for them to be able to adopt these new technologies.
I mean, the labor impact of AI is front and center. It's interesting that you're really leaning into that, Peter. The prioritization of innovation, how much are you able to do that while still driving the bottom line, because profitability is being asked of you?
Yeah, well, actually, AI is something which is very core to Grab itself. It's not something new also. We've been focusing a lot on AI about 4 or 5 years ago. We've developed our own models actually very early on. We now have over 1,000 models in production that we're running here. And the way we've been operating in the last 18 months since the technology has advanced so much is really internally. We're also using a lot of AI. Over 98% of our engineers today use some sort of AI code assist. What also we're starting to deploy is the products to our customers also. We have voice activation now for the visually impaired, where they can actually just speak to our app and able to order food or order a ride, for an example. And also we've deployed co-pilot equivalent to our driver base, where they could really rely with a really effective pilot to be able to navigate throughout their day. And also with the merchant bot, actually, that we have also, they can interact with our merchants.